Hi everyone, and welcome to our second video in our automation video series. My name's Mitch and I'm in the automation team here at Betfair Australia, and today I'm here with Paul Smith, one of our seasoned automated punters. Today we'll be discussing things like bankroll management, staking plans, as well as the mental game of wagering, as told in our content on our Automation Hub by poker coach Jared Tendler. Paul, welcome.
Thanks, Mitch. It's good to be here.
Awesome. Paul famously deposited only once into his Betfair account and has never deposited since, and is one of our most successful automated customers. So, Paul, can you tell me why is staking important?
So staking's very important because it's your bankroll management area. Your bankroll is basically your life when it comes to Betfair. As you said, I deposited once and I treated it like it was my one and only chance at doing this. So getting your staking right from the start makes it a lot easier when you get up to the larger bet sizes because you've followed the discipline the whole way. So staking has a few different aspects to it on how you want to stake, and that is basically you need to understand what your risk tolerance is to start off with. You need to understand how that risk is going to affect your emotions, and you need to understand what you want to achieve out of your staking bank. Those three parts are kind of how you set your staking. So if you think about it, if you're a low risk punter, you don't want to be betting a large percentage of your account, like 10%, 20% on a bet. Generally, professionals want to stay fairly small. And the larger you bet, the more your emotions are actually going to come into play because you're going to see that bank wildly go up and down. Now, it's also not good to be betting $1 if you've got, say, $50,000 in your account because you're not going to make the profit worthwhile. So you kind of got to balance all three areas.
Yeah, if you're only betting really tiny stakes, depending on what your objectives are, you may not ever get to where you really want to get to.
Exactly.
But again, if you're risk intolerant, then perhaps betting big stakes on long shots might not be the best way forward.
Exactly.
Brilliant. So let's discuss a few of the more common staking methods. So we're drawing on some content that we previously published on our Automation Hub. We'll post a link below where we did some Monte Carlo simulations on certain staking strategies, and we'll discuss the results of those as well as put the graphs up on screen. So Paul, tell me about flat staking or level staking.
So a lot of people start with level staking as that's because it's easy to understand. It also limits your risk, but you're going to be having essentially the same amount on every single bet regardless of the odds or the chance that you think that that bet is going to win. The good thing about that is you know what you're risking. You're only going to be betting a certain amount and it will only go up and down, so the volatility isn't as bad. The problem with that is you're having the same amount on a $2 shot as you are on a $10 chance.
Yeah, absolutely. As you can see on the graph on the screen, there's not much volatility in the graph. We've got a $20 bet amount on the screen with an 89% chance to achieve the objective, which is a great result, only 11% chance of ruin. Awesome. So what about proportional staking?
So proportional staking is where you vary your bet sizes based on the odds generally. It can be based on something else like your own odds, but it's generally based on the odds that are in the market and you want to win a certain amount. The good thing about this is you're going to be having more money on chances that are more likely to win. So a $2 chance would have a lot more on it than, say, a $10 chance where you want to reduce your risk. Now, the great thing about this is you have reduced your risk. Your account's not going to be so volatile up and down. But what comes with that is you're not going to get those big wins from those big odds, and therefore your growth is going to be a lot lower.
Yep, absolutely. And if you see on screen the graph I've got here, this simulation was based on betting 2% of bankroll, so not dependent on odds, but depending on how much money is in your bank. And there is a bit of variance and a bit of volatility in there towards the right-hand side of the graph. There's a 97% chance to achieve the objective, however, which is really good, and only a 3% chance of ruin. All right, let's move on to everyone's favourite, martingale staking.
So martingale staking is very well known in the casinos because everyone can bet on red and black. But you can do the exact same thing with sports betting. Now it is a very high risk, high reward sort of staking method. The chance of completely losing your account is quite high, but with a high strike rate, it can keep your account growing because you're always trying to recover the loss on the next bet or next series of bets.
Yeah, as you can see on the screen, the grading is pretty level, goes all the way up, but you can see some pretty deep spikes where you've had long losing runs and potentially have gone almost to zero. So there was a 46% chance to achieve the objective, but a 54% chance of ruin, which is significant compared to the other options we've previously discussed. And Paul, if you've got martingale staking in place and you'll end up putting really, really big bets on, are you in danger of not getting on?
So that is one of the problems with martingale. It's easy to get on a $1 bet, but once those bets start getting up to 1,000, 5,000, 10,000, you're really starting to get limited on the markets that you can be in, and you're only going to be on the major sports, the major games, if you were to go that way.
Yep. Awesome. And then the final one we want to discuss today is the Kelly staking method.
Yep. So the Kelly staking method is regarded as the optimal way to bet. It's essentially looking at your edge in each of the bets and betting proportional to that edge. Now, that's great if you know what your edge is. Unfortunately, most people can't quantify what their edge is on every single bet. And because of that, they tend to overstake on the wrong bets, which turns Kelly into more of a variable kind of result.
Yeah. Well, on the simulation we've got on the screen, you can see it was successful with a 96% chance to achieve the objective and only 4% chance of ruin. So that is a good result. You see a little bit of volatility towards the right-hand side, but it just depends on the simulation that you do and your weighted average price. As you said, Paul, people often underestimate or overestimate their odds or their percentage chance against the market. What happens if, say, I think something is a $5 chance and the market has it at a $2 chance? Is there something called an edge cliff where suddenly I'm wrong?
Yes, so the edge cliff has been talked about in a couple of the videos that have been done. The edge cliff is essentially where your models stop working. So it means you generally don't have some of the information that the other big bettors in that market have. And from that point on, you'll generally start to show a loss on your bets instead of a return. So generally this will fall somewhere for most people between a 5% edge and a 20% edge. And then it will fall off fairly rapidly at that point.
Oh, yeah. Yeah, on the screen we've got a simulation we've done and it falls off around the 13% mark. So yeah, anyone who's ever used the Betfair Hub prediction model, so we've got a Greyhound, a Thoroughbred, and a harness model up on the Automation Hub. We've got implied probability next to the rated price, and that calculates an implied probability difference between the best available price and the rated price. And often you might see things that are sort of 2-3% favourable, which is a good result, and you could probably trust the model to be sort of accurate in that prediction. But then if you see something that's 20% off, then probably maybe look elsewhere or look for a different angle on your bet perhaps.
Exactly, because pretty much the market is very accurate, especially when we get to the Betfair starting price in races or the last price taken pre-play. So if we know that those prices are really accurate, we don't want to be too far away from those.
Yeah, absolutely. And then when you put a model or a staking plan into production, into live markets and start placing bets, you might encounter something called odds slippage. What is that?
Yep, so odds slippage is where you have assumed in your backtesting you will be getting certain odds, and that's because while you were backtesting you've just used data which was available. But when you put your own program in, you're not always going to get those odds that are available. There might not be enough money at those odds, or they may just move too rapidly for you to bet. So you're going to be putting bets into the market and they're not going to get matched. So you need to decide whether you're going to cross the spread, which means you're going to get lower odds, or you maybe just be putting in larger bets. So once you start to get up to the really large bets, you just can't get them on at the odds, and you're going to have to work out a way to get as much money on at the odds which are close to the market.
Yep.
You need to understand whether those are still going to give you a profit.
Yeah, absolutely. And then also, if you're doing these really big bets, perhaps not dumping $1 million into a Australian Test cricket market in one hit, probably not the best idea. So drip feeding little bits here and there just to get your price, but understanding that if you dump all the money into the market at once, you might significantly skew the market.
Getting bets on is a whole nother topic
Yeah.
that is quite in depth.
Yeah, absolutely. Oh, cool. So we've discussed a lot about the staking plans and how we implement them, but now let's move to one of the other things we discussed in Bankroll Management and staking is the mental game. So the Mental Game of Wagering is a series that we did with a coach called Jared Tendler. He is a mental game coach that's coached PGA golfers and poker players in the US. He's written 3 books, so the Mental Game of Trading and the Mental Game of Poker, parts 1 and 2, and is definitely a source of wisdom on this topic. He says the first rule of emotions is when the emotional system becomes overactive, it is the power to shut down higher brain functions. What does he mean by that, Paul?
So humans generally are reacting, and you hear it in trading all the time, to either greed or fear. They're the 2 primary emotions that we're going to get when we're betting. Now, if you start having losses and those losses start to add up, especially over a few days, 1 loss might not be an issue, 2 losses, 3 losses, 4 losses of losing days, and we're starting to get the numbers up as a percentage of your bankroll fairly high, you're going to want to stop betting. You're going to have that fear, right? That's a natural response. That ties into what we were talking about with staking. If you're betting too much when you're staking, you're going to be a lot more emotional about how those numbers move. Now, as soon as you start betting, it's probably just variance. We talk about variance a lot, but variance will go up and down, and when it goes down, if you reduce your stakes, you've reduced them at the wrong time. Yep. The same with if you get overconfident, and I do say to a lot of people, generally you'll kill your bank when you're being overconfident, when you're on a winning run, because you will increase your staking to a point where it is too much for your bankroll. Yep. Just because you become overconfident, you think you're indestructible, you can place whatever bets you want. You think you're reading the market and you're not going to get anything wrong, and then you'll take a series of hits, because that's essentially how variance works. We're not in a certain game where we know the outcome all the time. You've got to think in probabilities. There's always a chance that the selections can lose.
Yeah, absolutely. And that emotional intensity, especially on a losing run, can be debilitating and shut down those higher functions. And
exactly.
You lose that insight.
You do. You stop looking at it the same way, and it's more about stopping the pain from occurring, which is the losing of money, than it is about looking at those opportunities in the market. So you'll start to look at the market completely differently, and you'll miss those opportunities that you would normally take that would bring your account back.
Yeah, almost start expecting to lose.
Exactly.
But are emotions all bad?
No, you need some emotions in what you're doing. You can't be a robot with this stuff. You need emotions, otherwise why would you be betting?
Yeah.
Right? You can't just be a robot and go, well, I'm just going to let it go and then I'll collect my money. There's a bit of fun to be had in sports betting. It's not a purely like a work job or something like that, even as a professional. And being able to be motivated lets you put more work in, it helps you be focused on what you're doing. Essentially, without that, you're not going to be putting in that work. The other thing is you need the emotions, especially the negative emotions, to give you an idea of when something's wrong and use it as a signal on what to look at. So if you know that you put in a bet that you shouldn't have put in, you're going to feel that emotion, especially if it loses. You'll go after, I shouldn't have put that bet in. And it's important to then look at that as a signal to go, okay, how could I have stopped myself from doing that?
Yeah, absolutely. So emotional control is not the answer. You can't be emotionless in this game, absolutely.
It'd be very draining to try to control your emotions non-stop.
Yeah, exactly.
It's more about not controlling your emotions, but not letting it get to that stage where you have to have self-discipline to control your emotions.
Now, Jared Tendler discusses something called the Yerkes-Dodson law. We've got something up on the screen that sort of shows an example of what it is. It's where you generally will perform your best when you're sort of in the middle of that arousal stress graph. How have you sort of experienced that law in practice?
Yep, so essentially it comes back again to that motivation. If you're not having those emotions there, then you're going to be lazy, you're not going to put in any work, you're not going to win. And it's also at the other extreme when you go past the natural point at the top of that performance chart. Once you've gone past that, you're going to start to make bad decisions because that's when your emotions are coming in, you're becoming overstressed, you are second guessing yourself, and you're going to make mistakes.
Yeah, absolutely. And then Jared goes on to discuss things about anger, confidence and fear, and sort of profiling your experiences of those emotions. Have you been able to put those things into practice?
Yep, so Jared's got a really good technique for doing the profiles. So essentially he has you rank different areas of each profile on a 1 to 10 scale, 10 being most extreme, probably when you're throwing a temper tantrum for anger. And by having the different levels on that, you're able to actually see yourself escalate over time.
Yeah.
So what you should do at the end of a trading session or a betting session is essentially look at how did you feel that day? Did you have anger? Did you have overconfidence, which is going to be on a winning run? Were you fearful of something happening? And if that did occur, then start to put it into that range of 1 to 10, and what actually started to trigger those feelings. From there, you'll be able to review that before your next session and go, okay, if I start to feel like this, then I know that kind of profile is going to be hurting me that day, and you can make a decision on what to do.
Yeah, absolutely. We know one of those, one thing that can be caused to escalate those kind of anger feelings is variance. We've mentioned it a little bit in the video so far, but what is it, and how do I know what is variance and what's a bad model and things like that?
So we hear about variance a lot. Variance is just part of what we do.
Yeah.
We are we're in markets that are not certain, so we have to be able to deal with those uncertain outcomes. And variance is just the result of the probability of your bets, either winning or losing. Now, some people are going to have very high variance, some people are going to have low variance, depending on the types of methods they use and what their strike rate is. But variance isn't something to really be scared of. It's something you've got to realise is going to happen. So your account is going to go up, it is going to go down. What you need to look at is how has it gone over a week, over a month, over a year. If it's down over that point, well, you don't have an edge.
Yeah.
But if you have an edge, you would expect over a month, 2 months, 3 months, a year, that your account's going up and up.
Yeah.
But variance isn't something to be scared of. If variance wasn't there, none of us would bet.
Oh, exactly.
Right? Because all the odds would be $1 and we'd get nothing back because we'd know the outcomes.
Yeah. No, absolutely. Variance is can be scary, and I would hope that people would put in place strategies to make sure that their variance for their model, those kind of really volatile high variance models, perhaps aren't paired with a punter who is risk averse.
Exactly.
Yeah, you need to match yourself.
You do. You need to match the method that you're using to what you're comfortable with.
Yeah.
And if you're uncomfortable, then it generally means you're staking beyond what you should be staking for that method.
Yeah. And that sort of feeds into our next topic around the A to C game analysis. So assessing, how variance affects you and how it affects your betting, your emotions, is part of how you assess your A to C game. There's a proverb going around that a chain is only as strong as its weakest links. So, Paul, tell me about the A to C game and how this proverb relates to this assessment.
Yep. So again, the A to C game comes from Jared Tendler's Mental Game of Trading, and out of his poker books, where he called it his mapping his hand history and stuff like that. The A to C game is looking at the different levels that you perform when you're doing activities around betting. Now, it doesn't have to be actually betting. It could be when you're analysing data for your bets and you're creating models. But your A game is essentially when you're focused, when you're not making any emotional mistakes especially. You may still make some technical mistakes in your A game, and that's generally where you haven't learned certain technical techniques or something. But your A game is when you feel like you're doing your best. Your C game is when you're doing your worst. You've essentially lost a whole bunch of money and you basically walked away from the computer because you can't handle it, or you're completely overconfident and you've overstaked because you thought you're invincible. Yeah. Now, that's your C game. At that level, you may be making lots of technical mistakes because you've now, as you said, lost essentially your brain function, making rational choices. You're mainly using emotion to make your choices. That's not going to be great, and it's generally going to lead to losses. Now, the B game sits in the middle. The B game is a much harder area to define. So it's going to have some emotion attached to it. It's generally going to be some technical stuff as well. But it varies, and you're mainly going to be looking at your A and C games because that's where it's pretty obvious where you're your best and where you're your worst. Now, it's all good to know what your A and C games are. The issue is how do you improve your C game so that it comes closer to your A game. Yeah. The whole point is consistency. We don't want to have this really wide range that we perform in. Yeah. That's going to cause more variance, which we've talked about is going to make people uncomfortable. So what you want to do is try to move your C game as close as you can to your A game so that you get nice, consistent results and you get the returns that you want.
Yeah, absolutely. And we put a little graph up on the screen to sort of show what we're talking about, and it feeds into the inchworm concept. So an inchworm is a little creature that moves by essentially pinching its top and tail together, basically bringing its C game close to its A game, and then it pushes its A game out in front of it. So that's, I suppose, what we're talking about in terms of that's how we improve, how we move forward by improving the worst parts of your game, and then we can push your A game forward.
That's right, because if you're always making those mistakes in your C game, you're never going to have the ability to see the things that you're missing in your A game. There's always a perception problem. You don't know what you don't know until you've learned it. Yep. You're not going to have the time to learn what you don't have in your A game until you've moved the C game up to a level where you're looking for new things to learn and improve on.
Yep, absolutely. I suppose one of those things in your C game would be how you react to losing. So tell me about how we win by being better at losing.
So losses are inevitable. We have to have losses, otherwise no one's going to bet. Yeah. Especially on an exchange where you've got two people on either side. So everyone has a different thought on what's going to happen in a game. If we didn't, the odds would essentially be 1 and we'd make no return. So it's really important to understand that the market's just there. It's not trying to get back at you. It's not trying to cause you losses. Everyone's in there to try to win. It's not the market's fault when you lose or anything like that. Essentially, what we're trying to do with the losses is just ensure that you have less losses than your wins over time. So you need to look at everything, as I said, based on your 1 week, 2 week, 1 month, 1 year kind of results. Losses are going to happen. You need to make sure you stake appropriately for those losses. You need to understand your maximum drawdown. You need to understand your distribution of returns. All those things will help you to stake appropriately and therefore understand and accept those losses when it happens.
Yep. And I suppose then determining whether one loss or your next loss is the loss that breaks the camel's back, essentially, whether you need to quit a model, quit a sport. Why do you think quitting is hard?
So there's always the sunk cost fallacy. You've put in a lot of time on a model. people are always, like, especially those that do modelling, they put in a lot of time researching that model, collecting data, training it. They've put it in and it hasn't worked. And so they're going to try to persist and persist and persist because they've spent a month or 2 months or 3 months. It's the same when you're researching a game, right? You might research a particular game and you've decided the odds are $2, but the odds have come in at $1.90. You shouldn't be betting at $1.90 if you think the odds should be $2.
Yeah.
You could lay,
Yep.
and that's one of the advantages of Betfair. But you have to remember, sometimes the best thing is not to bet if you don't think you have the edge there.
Yep, absolutely. And that can be one of the hardest things. Knowing when not to bet is also as much of a skill in itself as picking when to bet.
Exactly. So one of the things you can do if you're looking at a model is track the expected winners based on the odds. So you can work that out, 1 divided by the decimal odds, and track that to your actual winners. So you can start to get some statistical analysis in there with p-values and tests like that, which will allow you to track it in real time whether you should be making a profit or whether you shouldn't. Now, if they completely diverge and they keep diverging, something's wrong and you need to stop. But if the expected winners is going up and your winners are going up as well, and that's just bouncing around that line, you're probably doing okay, and you just got to wait out that losing run.
Yeah, identifying where you can keep going and where you need to stop is definitely the hard part, and then also understanding your emotional involvement, perhaps in the sport. So if you're a one-eyed Richmond supporter, maybe steer away from AFL if you can't sort of divorce that emotion from your rational betting decisions.
Exactly. Yes. People do get very emotional, especially around teams that they like and they want to back them. It does make the game exciting and interesting, but if you treat it like a business and you treat it professionally, you should be only placing bets on that you think you have an edge on.
Yeah. And that sort of feeds into intuition, right? Intuition, you feel like you can trust it, but it might actually be emotions masquerading as intuition.
Yeah, intuition is an interesting thing. It's less of a problem for an automated punter than it is for someone that's manually placing the bets.
Yeah.
But intuition is your emotions and your mind basically giving you an insight into something that it's seen previously. So you won't have intuition unless you've been looking at a particular sport or particular markets for a long time. You build that up over time. So if you're only new to a sport, your intuition's probably less likely to be correct. But over time, it's probably a signal, again, that there's something there to look at.
Yeah.
And maybe you should be looking at that in a rational way when you're got time and away from the game. But it's always a signal to look at what you can see.
Yeah, perhaps assessing the game sort of when you're sitting in the crowd at three-quarter time perhaps might not be the best option.
Probably not the best option when you're trying to get your team to come back.
Yeah, from 30 points down.
Yes.
Interesting. So you mentioned difference between manual and automated punters. So from a mental game perspective, what's the hardest thing about making a shift from manual to automated?
Yep, so manual is always going to have a lot more emotion to it. Now, as soon as you're impacted by your emotions, it's hard to hit that button. So the great thing about automating what you're doing, it's going to place the bet. So regardless, I can walk away, it'll just keep placing the bets exactly like it should mechanically. It's got no emotion in it. Win, lose, draw, whatever happens, it'll just keep placing the bets until you hit stop. Now, when you're a automated punter, it's not so much bet by bet, but it's a series of bets. What's happened this week? What's my drawdown like? Should I hit stop on it because we're now down 10%? Is it something that I should increase staking on? So you're looking at more of a holistic account level rather than a bet by bet situation.
Yep, interesting. One thing that's sort of discussed in our Discord quants forum is the analogy of keeping your hand on the hot stove, but also identifying when to take your hand off the hot stove.
Yes, it's a very tricky thing.
Yeah. Absolutely.
But as I said before, you can try to look at expected winners versus winners.
Yeah.
There's lots of statistics out there that you can have a look at that can help you to assess whether things are changing or whether it's continuing on, and it is just some variance you're going to have to deal with.
Yeah. Brilliant. So regarding some of those statistics that we mentioned, we'll discuss those in a later video, so things like Monte Carlo simulations, p-values and things like that will help you assess how a model is going against performance versus back testing, etc. But yeah, that sort of brings us to the end of the video today. Paul, thank you very much for appearing on the video.
Yep, thank you for having me.
Brilliant. So yeah, look forward to our next video. If you'd like to be invited to our automated Discord forum, send an email to us at automation@betfair.com.au and we can get you an invite, and we'd love to have everyone on board. Thank you everyone for watching the video and for your time today, and we look forward to the next one.
Chances are you're about to lose. For free and confidential support, call the number on the screen or visit the website.